stating the update on situation regarding coupon pay with Eurobond 2024. License applications.
Good morning, traders. It's 8:02 a.m. Chicago time on the 29th of March, 2022. It is episode number 2201. It is Tuesday. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just for my own sanity, if you can give me a mic check, that would be great. Looking at what is going on here. One second. For some reason, it has scrapped my... All right, there it is. Looking at the Convergent Trading pre-market summary sheet this morning. A little blown out, but fine. Oh yeah, it went back up to 100% for some reason. It's interesting. All right, so it should be good now. Looking at the pre-market summary sheet this morning, we are seeing a market that is definitely has a risk-on bent to it. This morning we pushed through the 4,600 in the S&P, and Europe is responding very well. What are they responding to? They're responding to the peace talks in Istanbul hosted by the Turkish government. Turkish government that is negotiating a peace talks between Ukraine and Russia, and it looks like steps are already being made for Russia's withdrawal and terms to be in place for peace to prevail. As a result, we saw a couple of strong pushes in the equities, especially in the European indices. We've seen some very aggressive pushes from crude. Crude was at $107 this morning. The high is 107.84. Currently trading at 99.90. The low is 98.40, about $1.50 from where we are now. Crude is down 560 basis points. And so things are responding. At the same time, we are getting more and more out of Shanghai relative to this new variant, this COVID outbreak, and so there's an eye to that. Shanghai, of course, a major manufacturing center. This morning, the Great Britain released its consumer confidence for April. The expectation is negative 14. The forecast was negative 14, came in at negative 15.5, so slightly worse. Consumer confidence out of France came in at 91 versus 94 consensus, 96 forecast. There were some comments from Feds Williams coming across now. We're looking forward to the JOLTS job openings. This is a key figure shown in bold here. The key figure for today, expecting 11 million jobs still open for February. Massive gap between job supply and job demand currently. And then we just had the Case-Shiller home price year on year at 19.1%. Can you imagine homes nationally going up in value 19.1% year over year? Just insane. Consensus was 18.4, forecast 18.5. And this morning as well, with the JOLTS job openings, we get consumer confidence for March. Expecting consensus is 107, forecast 106. Keep an eye out for that. After the close at 4:30, we're looking for U.S. API crude oil stock change. This is not the same as tomorrow's EIA. But it does make a difference. The overall look is that the yield curve continues to invert. The 5 over 10, 5 over 30, 2 over 10, all are looking pretty pretty interesting, I should say. It's hard to read too much into that. As far as crypto, this, if you recall, this was posted in late, basically after Thanksgiving. I created this chart after Thanksgiving, and I posted it at the beginning of December, stating that the crypto space looks overdone and had a bearish view on it. Crypto has actually pushed into the 36,000, which was my key support area, poked through a few times, and has been stuck between this minor resistance at 46,000 and the support at 36,000, and we have finally pushed through now. We pushed pretty strong yesterday, and we're pulling back just a little bit today, but this thing is barreling its way back into the 50,000 mark. Above 52.6 pushes the shorts onto their heels, and it's likely to make another run for the high at 69,000 on Bitcoin. So the ETH chart looks the same. Keeping an eye on what's happening in crypto. Felt like I should share that chart. So you can see down here that Bitcoin's taking a break. ETH is catching up a little bit. ETH got as high as a little over 3,500, and so pretty strong. So the metals, commodities are likely to take a turn down now, especially grains and so on, as the peace talks continue. And if and the U.S. is reporting, in fact, just across the news feed a minute ago, it looks like somebody was reporting that there are signs that Russian forces are standing down, and this caused a quick spurt in prices on the indices. So news driven still. The S&P this morning, we're looking at a market that's trading heavier than the last few sessions. 250,000 contracts traded. 89% of the inventory is above yesterday's settlement, so it's long. The inventory is long, 89%. So technically, you can argue 89% of that 250,000 traded above the settlement price. The market is buyer heavy, so to speak. This is not an accurate thing. It's a bit of a rule of thumb. The range is quite wide, actually, 46 points. Now, I had said, I think I've repeated a couple times, that if peace talks or a ceasefire comes into play, this market is going back to 4,600, and it has done it in an incredibly sneaky way. If you look at the weekly chart, we'll look at the composite here. This has been a heck of a bull run from the lows, and with this heavy delta buying, the delta overnight is relatively strong. Heavy delta buying run into the 4,600 kind of takes the trade away a little bit. But we have a range of 46 points. We're opening in a gap this morning. We're at 46.06 currently, with the high yesterday at 45.69. So we've put in an overnight high that's about 40 points, 42 points higher than yesterday's high. We're opening approximately 36 points above yesterday's high. So we have a 36-point external gap or gap zone this morning. We'll see where we end up before the open. The point of control at 45.88, also above yesterday's range. That's an indication that there's a significant amount of strength here. We're likely to pull back a little bit and gap and go in the S&P. So that's what we're looking at for this morning. A quick review of yesterday's trading. Yesterday, open auction at the upper end of the range. We tested outside of the range, the prior range, Friday's range, which Friday gave us a weak high, and then we came back in and it was very choppy in the morning. It was very balanced, pretty tight range, and then we finally broke lower. It managed to catch the short here in a trade that I narrated in the Convergent Trading Head Trader channel, and then instead of holding the IB low, any opening swing low, it consolidated and it just squeezed through these references. A very tight consolidation, very easy to see now, very tight consolidation, a zipper that broke higher. The entry for the long is the retest of the zipper right there, and then we went neutral. We finished neutral extreme high yesterday. We settled right at the high of the range, 45, 46 and a half or so is the site of the single print. So we ended up taking the overnight low, the overnight high, the IB low, the IB high, and finishing at the high, giving us a neutral extreme up day, very, very bullish action, as I said, with a relatively weak high. So we expect this to continue, as it's obvious by the price action and the profile itself that sellers were not found yesterday, and that the auction is likely to continue higher. That's the nature of the auction market. Coming into this morning's session, we remember the blue profiles. The blue hollow profiles are RTH. I define RTH as 9:30 a.m. Eastern to 4 p.m. Eastern. I don't like talking in Eastern time zones, but that's most common. I'm in Chicago. For me, it's 8:30 till 3. That correlates exactly with the equity session, with the stock market, and the settlement is set in the last 30 seconds of the stock market close. So I stop the RTH session at 3 o'clock, and then pick back up with the orange profile right after that on the reopen, and you can see that we closed or settled right up here at the 45.6850 or so. Let me check the settlement. 45.68 even. We settled at 45.68 even. We tested below it by a couple of points, 3 points, but overall the action has been very bullish. Look at that delta. The delta is very bullish this morning. Just lift. We saw a reaction into yesterday's close in crude oil, which was kind of a hint that something was going on before it hit the news, before this thing took place. There was some selling into the crude oil session close, not the pit close, but the session close, the Globex session close, and that continued this morning. This morning's move down in crude is impulsive. The expectation is we are likely to continue lower in crude. The market is pricing in a high probability that sanctions will be removed and Russian energy will continue to flow into the economy. So overall, very bullish this morning. It's really important to just be patient. I mean, I know saying be patient, I don't like saying be patient, because the ensuing question is, be patient for what? Be patient for your plan, but be patient because it's really important for us to see what the buyers do on the open. Do we get some responsive selling to at least the point of control, the overnight point of control? So overall, if you look in front of you here on the chart, the overnight point of control 45.88 coincides with the full session mid and full session VWAP. And this is likely to be the magnet for the session early on. So the question is, do these longs, are they weak enough to want to take profits? And so we get some responsive selling into the 45.88. If we do get responsive selling, which is great, which would be nice, do we get support at the 45.88 or thereabouts in this kind of tight, difficult zipper right here for continuation through the overnight high, or does it break below the overnight point of control, the 45.88? Use that as resistance, which gives us a shot at a short down into 45.69. That's what I'm interested in. I'm looking for a trade that yields 15 to 20 points with about three and a half to 4.5 points of risk. For an overall, that sounds like a 4R trade, but because I scale out, really it's closer to 2.8, 2.7R, which is good enough. So that's what we're looking for this morning. Do we go and tie in to the prior closers? This news so important and so effective in terms of reducing inflationary pressure, reducing the price of energy and commodities to the point that the market is likely to continue to wear to the next big area, which is 46.60. This is the next big magnet up above. So that's what things look like for now. Man, why does it do this? Kind of annoying. So what are we looking at in terms of what's expected for today? First, I want to remind you that tomorrow, if you have not registered yet or entered your name yet to be part of the drawing for these 3 Bose high-end quiet comfort headsets as a prize, you simply need to input your name, edgeclear.com/deli, edgeclear.com/deli. But tomorrow at noon Eastern, I'll be speaking on Futures Radio Show as part of a series that EdgeClear is sponsoring that will discuss some key pointers and actionable items that traders need to consider and make a part of their day-to-day trading in order to trade sustainably. Let's take a look at what's expected for today. If you have not registered, go do that. You can do that in a separate browser right now. All right, so I'm going to bring in the key support and key resistance today, which brings us into the 1 Vol Sigma. I'm going to keep the 46.60 in view. Here's how things are likely to play out today. My key trades for the day, the key trades that I'm looking to take or stock today, I'm looking for an immediate push. I'm not expecting this thing to pull back. This is a high flag. They're not giving up any territory. I'm looking for it to push into this 46.2350. So this is the 23 area. I expect it to pull back to the open. I expect it to get through the open on the other side. I expect us to exhaust the buyers a little bit. Buyers become sellers as profits are taken off the table. This brings us back to the 4600, which is today's session's over-under line right here. This lavender line is the over-under, and I expect us to poke below before consolidating and holding steady. So we have already made a run. I expect us to keep a gap open, a gap zone open. I expect that we are likely to be somewhat responsive this morning, but hold these higher prices overall. I don't have dramatic expectations for what we're likely to see today, but if we do push higher, if we do make a strong push, then we're looking at this MC point of control up in the upper range, and resistance is set here. My expected resistance is at 46.45 from the past. So it might push up here and pull back. I don't expect it into the next point of control. I expect the 4600 to be a chop zone for today. We'll see how that goes. The secondary scenario is an open auction that responds down into the 4600, pushes through to the 45.88, gets back in there, and then we chop around for a while, and then we start to squeeze pretty strong after pulling back early. So an early test downwards is likely to give us the power we need to push to the upside. If we get an early test downwards, I expect that to give us a base to check for real sellers. 45.88 may or may not hold. If the 45.88 does not hold, then I'm looking for the 77 to hold right here. 77 is very important support. If that holds, then look for a 50 to 60 point swing to the upside, which puts us at about 30 to 45 or so. That's scenario 2. Scenario 2 is strong bullish. Scenario 1 is bullish early, respond, then just digest the news. Just stand by and see what the next steps are and how the market prices things in. We see a spike higher in the treasuries. The 10-year has shifted up from about 121.03 to a high of about 122.08 and a half. It has spiked up. The bonds have spiked up as well from about 147 to 148 and a half maybe. So we're seeing that supportive push, which is bullish in the indices. So if anything, if there's any push down, I don't expect it to be very strong. If there's a push higher, I expect it to push a fair amount. My skew is bullish in both scenarios, but I'm also aware that we've had quite a run. We've pushed through 4,600 and we may pull back before it has a base to push to the next magnet at 4,670 or so up here, this MC point of control. Okay, I know that's a lot to go over, but you're smart people and you're listening. So pay attention to how it's responding this morning. I will not engage early. I'm going to watch to see how the sellers behave. If the sellers seem weak, then I'm going to look for a spot to get long with defined risk and then take my hand off the mouse and let the market do its job and carry me along on the long side. Good luck.
New high